The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice. Please consult your tax advisor, even if it's us, to find out how this may apply to your specific situation.
Hey listeners, and welcome to Tax Trails. Joining us on the trail today is one of the partners in our Moab office, Ryon Jones, to talk about accounting for small businesses. Here are your hosts, Derek and Spencer.
Thanks, Chandler.
Thank you, Chandler.
So, today we're excited to have Ryon Jones on with us. So, Ryon, welcome to the podcast.
Thank you.
It's good to have you here.
So, how about you go ahead and give us a little bit of your background, like where you're from and what brought you to tax and stuff like that.
Yeah, sure. So, I was born in Ogden.
Okay.
I lived in Cache Valley for a little bit. My family moved to Moab when I was about 12. So, kind of settled here, graduated from high school here. So, Moab is pretty much home. I went to school at BYU, master's degree in accounting with an emphasis in tax.
Okay.
And then I took a job with a local firm in Utah County for about 5 years. And in that firm, interestingly enough, they didn't really designate you either a tax or an audit guy. You did both.
Okay.
Oh, interesting.
Yeah.
Or girl, sorry. So got to be politically correct.
That's right.
So starting out my career in public accounting, I did both tax and audit.
All right.
And primarily my audit work was in governmental audit. That firm I was with had a decent size practice in that arena. And kind of what led me to tax, I mean, that's what I specialized in school, but then when I was with the firm and had the opportunity to do both, audit took way too long for me. It just drug on way too long. Like I could be on an audit for 2 months and be constantly dealing with the audit. And for me, I just needed something, more variety, kind of at a quicker pace.
Yeah.
Do a tax return for a couple hours, move on, that kind of thing. And the tax work interested me more as well, just kind of the subject matter of the tax work versus the audit work. I thought the audit work was a little bit tedious.
Yeah.
Now, I'm not trying to be offensive to any auditors.
Sure.
That's just how
We need them.
That's how I felt.
Yeah.
Yeah. So,
You're pretty lucky to be able to get that experience in the public accounting world. Usually, you kind of get started down one track and that's it. So you're lucky to experience both and figure out what you really liked.
right. And I don't really know if they still do that at that firm, but at the time, I mean, even some partners gravitated to one or the other, but there were several partners in the firm who did both.
Yeah.
Oh, wow.
Did audit and tax. So
It's
it
unique.
wasn't unique to just, like a new staff level or that kind
Sure.
of thing. It was just part of their firm culture.
Interesting.
Yeah.
Yeah.
So kind of moving on from that firm, I was with that firm for about 4.5 years in Utah County.
Mm-hmm.
And then I had the opportunity to acquire a small tax and accounting practice in Moab
Awesome.
in 2004, which was a little bit of a stretch because I'd only been in public accounting for 4.5 years.
Yeah.
So for me to just kind of jump into this sole practitioner type business after 4.5 years was a little bit of a stretch, but it worked out well. It was just me and Karen Ballantyne, who's still with us today, in that office. So that was in 2004. Worked in that office. Karen and we had a few other people kind of come in and out over the years, but it was primarily Karen and I. And then Gordon Bay with Larson Company approached me in 2015 about possibly merging with Larson. And at that point in my practice, being in Moab for 11 years, we had grown pretty well over the years. And I was to the point where I wasn't really taking on any new work, any new clients, because
You're at capacity.
yeah, we just didn't have the capacity to do the work anymore. We were pretty well maxed out. I tried hiring a few people seasonally here and there, and it never really worked out for whatever reason. And so when Gordon approached me about merging with Larson, I met with Dennis Larson, the founder of Larson Company, also Greg Danning, who's now the managing partner, and Margot. They all came down to Moab. We all met, talked about, what that looked like, what I might expect. The culture of Larson really appealed to me. The fact that Larson had an office in Salt Lake and resources that we could draw upon, if we joined Larson, really appealed to me. I met several of the partners, and the partner group just kind of impressed me. They didn't strike me as, full of themselves or arrogant, or sometimes what you might expect to see in other partners in a CPA firm.
Yeah.
So I felt like the partner group was, a good group, good people, and we decided to do it in 2015. So we joined Larson and merged in 2015, and it's been, it's been a good experience. We've been able to grow a lot, take on new work, take on new clients, and and I've enjoyed. So this is my 10th year with Larson.
Oh, yeah.
This year will be 10
Congrats.
years. So, yeah, it's crazy to think that it's been that long, but it will be 10 years at the end of
you've
this year.
just about been doing it with Larson as long as you were doing it alone at this point. So,
Yeah,
yeah.
2000. Yeah, exactly, almost identical. Yeah.
Cool.
So yeah, so that's just a little bit about kind of my journey to where, how I got to where I'm at today.
That's awesome.
Yeah.
That's awesome. Thank you. And I'm sure, like, as you've built your own practice out here in Moab, I'm sure you've dealt with so many small businesses and have a lot of conversations with them. What are some, like, accounting best practices that small businesses can implement? Or what do you think are the best things for them?
Yeah. Yeah. So small business clients in my practice, and, specifically in Moab, are kind of our bread and butter. That's, we don't have the big companies or big insurance returns like maybe our Salt Lake office does.
Sure.
But yeah, our typical small business client, somebody that has a QuickBooks file.
That's always nice.
Yep. Well, maybe. It can be. And so, when you ask the question about what's a best practice for a small business owner, my first thought is you've really got to have an accounting system in place. And I've seen some small business owners who don't,
It can be hard when you start a business and you want to focus on your business so much. You're trying to get customers or sales or whatever you're trying to do. And then at the end of the day, though, someone has to tie out that bank balance. Someone has to go through those expenses and the revenue. And sometimes it can be really hard, especially if you don't know, what really like a balance sheet is or a P&L.
Absolutely. And especially when it's a new business owner, because they have so much that they're already trying to learn and go through that transition where they're becoming familiar with all the responsibilities they have as a new business owner. For them to think about accounting and an accounting system and maintaining that and what they need to be doing is almost just soul crushing, when they're thinking about everything else.
That's so far away from the things they're working on.
Yeah. So that's when it's really difficult, is when you have a new business owner. But
so I'm sure you've seen accounting systems in every way, shape, and form, right? You've seen handwritten notes and ledgers or boxes of receipts and invoices.
Proverbial shoebox.
Exactly.
Yeah, absolutely.
And sometimes that's a real shoebox, right?
For sure.
I had it, right?
Or multiple shoe boxes.
Yeah.
That's when it gets really scary. When you have multiple shoe boxes. But I think having an accounting system in place for a small business owner is just so crucial. And being able to understand a little bit about accounting, just basic accounting principles, which
Yeah.
takes, a little bit of learning and a little bit of training. But that's very critical for business owners. I've got some business clients who they monitor their business by what their bank balance is, right? If you don't
Yeah.
have a good accounting system in place, then you don't have reports to look at. You really don't have the metrics to look at to tell you how well your business is doing or what areas you might need to improve in. And so that's why, an accounting system is so crucial. And when you talk about best practices for just accounting in general and small businesses, I've seen clients that have accounting systems, QuickBooks, for instance, but they're not reconciling anything
Right.
in their books. Okay, so once you have the accounting system in place, I would say that the next thing to focus on and the best practice is to make sure that you're reconciling your bank accounts, your credit card accounts, any loan accounts that you might have. There's a term that is used in accounting called GIGO, right? You guys have heard it: garbage in, garbage out.
Yeah.
So if you're not doing those kinds of things in your accounting system, if you're not reconciling, there's really no way to know if your books are accurate
Right.
until you hand it off to somebody like me who's looking at it doing a tax return, and then I realize it hasn't been reconciled all year and it's not even close to complete or accurate.
Yeah.
Right.
So that I think for most small business owners is just critical. They need to be understanding that reconciling their bank accounts and their other accounts on a monthly basis is just, it seems basic, but it's critical. And I've had a lot of people who just don't do it.
Yeah.
Yeah.
So
Well, that makes a lot of sense. And for those who are listening and might not understand what reconciling means, essentially you're just taking the end balance of your bank account and you're just tying it out to your QuickBooks, making sure that the entries,
All the transactions,
transactions.
that are entered on your QuickBooks end up summing to that ending balance on the statement at the end of the day, right?
And-
So
exactly.
yeah, and every number on your bank statement or your credit card statement goes somewhere, right? It can't just be in limbo. It has to tie out. It has to go somewhere.
Has
So
to be posted to a general ledger account somewhere,
Yeah.
right? Yeah. If you're not doing that, tying out your accounting system to the source documents like the bank statement or the credit card statement, you really have no way of knowing if you've recorded everything completely.
Yeah.
If your books are accurate. So that's a key practice for small business clients in their accounting systems, is just doing that on a monthly basis.
Yeah. So people who are listening might be hearing that and be like, think it could be daunting to do that, and might think, you know what, maybe I should reach out and have someone else do it. Well, at what point do you think a small business should either look into outsourcing their own accounting or maybe bringing someone on?
Yeah, that's a good question. I think that's going to look a little bit differently for everybody. I think that's just a decision that they have to make. But number one, as we talked about earlier, small business owners, they're busy, right? They're busy running their business. They're busy generating sales, managing their employees, everything else that goes into running a business. And so in many cases, the accounting is an afterthought or not even on the radar, right? Not even a thought. So if that's the kind of business owner that our listener might be,
yeah.
they need to look at outsourcing it from the beginning, right? Hiring somebody in-house to do that bookkeeping, or hiring somebody like us, like a CPA firm, to do that for them. I will say that in smaller markets like Moab, finding qualified people to hire in-house to do bookkeeping is a little more difficult because there just aren't that many qualified candidates in the pool in a smaller market. And so in our office in Moab, we end up doing a lot of outsourced accounting for small business clients here because of that. The other thing I think to consider is just obviously financial resources and what's available to the small business client. That's probably going to drive their decision as well.
For sure.
But I think what people need to realize is that without some decent accounting, you're probably losing money in the long run.
Yeah.
You know, you're either your books aren't complete. When you take them in to get the tax return done, it's going to cost you more in our fees, right? Because we're doing a lot of accounting cleanup. And there still might be things that get missed, deductions left on the table,
Right.
those kinds of things. And I think really the most important thing to think about that we already mentioned is just having good data available in the form of financial statements
Right.
generated by the accounting system that will help you manage your business and help you make informed decisions.
Yeah.
Have the data to go on.
That's a critical piece for sure. You know, it's important to think about too. Outsourcing bookkeeping help can be there can be lots of different tiers to that kind of help too, right? So if you need some help, you know, maybe it's you've got as a small business owner, maybe you have the capacity to go in and do monthly bank reconciliations, but you need a little bit more, you know, help on categorizing maybe some expenses at the end of the month or on a quarterly basis or maybe just even an annual basis. And a firm like Larson can step in and help in any shape, way, or form, right? Essentially.
Absolutely. Yeah,
too.
absolutely. So, yeah, I think it really depends on the personality of the business owner
Yeah.
and what they want to do themselves, what they realize maybe they don't have the time or the know-how to do.
Yeah.
But I think for most small business owners, if they have the time with a little bit of coaching from, you know, a CPA firm like us or someone else that has some accounting experience, within an hour or two of some training and just meeting, probably 90 to 95% of what they need to know to run like a small business in a QuickBooks file can be taught and communicated. Now, that's not to say they're going to walk away and have 90 or 95% of it mastered after 2 hours, but you know, with a couple of follow-up questions and a couple of follow-up meetings, I think most small business owners would get pretty comfortable with what they need to do.
Yeah.
And then, you know, the other things that are a little bit substandard, like journal entries, you know, maybe loans are a really big area where I see small business owners have a hard time accounting for.
Yeah.
They just don't understand. You know, if you can record it in a check or a deposit in your books, they can do it, right?
Right.
But if it's a journal entry, forget
Right.
it. Like most small business owners don't have that accounting background, so it's just foreign to them.
Right.
I will say I do have a few clients that are very good, very meticulous in their books. They know how to do journal entries, but for the most part, you know, most small business owners that's just not something that's in their wheelhouse. And
Right.
that's fine. They've got enough other things to focus on. So those kinds of things can be cleaned up quarterly or at year end, you know, by us. And that's pretty common when we get a set of books to do a tax return from a small business client is to go through and do some cleanup, right? You guys have seen that.
Oh yeah.
Yeah. So.
Yeah. So I imagine sometimes, you know, a business owner, they might really understand too. Maybe they have gotten to a point where they understand their income statement, right? They might understand the ins and outs, but there's a whole other financial statement that needs to be accounted for, right, in the balance sheet, and that's where a lot of business owners struggle. Would you agree with that?
Absolutely, yeah. In fact, I think most small business owners with no accounting background or very little accounting understanding just think everything should go on the P&L, right?
Exactly.
Yeah.
What's the balance sheet? I don't need that. The only thing that should be on the balance sheet is my cash balance, right?
That's right.
You know, and in fact, a lot of the things that we see and that we clean up are just related to that as well.
That's what you're doing, right?
Yeah.
You're tying out the balance sheet.
Yeah. So a small business owner can look at their income statement and think they have a pretty good handle on where they're at and how their business is doing.
Yeah.
But if their balance sheet is not tied out and accurate, then when those accounts on the balance sheet get adjusted, it can change the bottom line on the income statement significantly.
Yeah.
Yeah.
When you're adjusting loan accounts, you might have loan payments that are posted. Classic thing we see is car loan payments posted auto expense, right?
Yes.
Yeah.
Ever seen that?
Yeah.
Sure. It happens all the time. So when we pull those off the income statement, we post it to the loan balance on the balance sheet. That's going to change things.
Yeah.
You know, tax payments are another thing that I see.
Yep.
Another thing that's really common that we see amongst small business owners is a lot of personal expenses just get thrown on the income statement, right?
Mm-hmm.
They might even have a category on the income statement called personal expenses.
Yeah.
Have you ever seen that?
At least they're tracking it.
Yeah. So we know that should be on the balance sheet. It's an equity item, right?
Right.
Distribution or a draw. Those terms are kind of used synonymously. But if you have a bunch of personal expenses posted on your income statement and you're not aware that they're not supposed to go there, that's understating your bottom line.
Yeah.
Right? You've got a bunch of expenses on your income statement that don't belong there, and so your bottom line is higher than what you're seeing. So just a couple of examples of how accurate accounting is really important for small business owners as they monitor the data and as they try to make good decisions based on that data as they run their business.
Yeah, that makes a lot of sense. Yeah, we've seen that probably more than we would like, but it is part of the business. That's why we're here, and it's
Job security.
Job security. Yeah, and we're here to help. And
We know what to look for.
yeah,
Yeah, it's true.
Another thought that I usually tell my clients, especially maybe clients that have just started a small business, is the more information they can kind of arm themselves with when it comes to accounting and their accounting system, the better off they're going to be, right? Now, not everybody's inclined to do that. They might not have the time, or they might not want to learn it. But for those that do, I think they're just going to be that much better off having that knowledge and having a little bit of accounting understanding. What it means when you look at a balance sheet and an income statement, what those accounts represent. When you post a transaction, how it's flowing through your accounting system,
Right.
how it affects your financial statements. So I always encourage small business owners as they're starting a new business to jump in and try and learn as much as they can in that arena. Everybody's different, some do it, some don't. But I think for those that have a good handle on it, they're just, it's just good information to have, and they're in a better position to manage their business more effectively, I think, than those that don't.
Yeah.
yeah.
Do you like explaining these things to your clients? Or you're pretty stingy with the details, Ryan?
Oh, that's a good question. No, I think it's kind of a client by client type of situation. If you start explaining some of these things and you look across the table from your client and their eyes are glossed over and rolling in the back of their head, you're like,
Yeah.
okay, it's time to stop, right? Like, obviously they're not interested in this, but for those that want the information and want to learn it, I'm happy,
Yeah.
to have that
Yeah.
discussion with my clients for sure.
Yeah. It can kind of be a fun thing to teach the business owner, right? And as they start to realize what is there, you can opposite of the eyes glossing over, the eyes opening up, and they're like, oh
Right.
wow.
Yeah.
Yeah.
look what I can know just by
Yeah.
this software on my computer. So
Yeah.
I think-
sometimes it's a fun part of the job.
Yeah, it can be to help educate people
Mhm.
and to help them just have a better understanding of how their business is performing
Yeah.
through their accounting system.
It uplifts both parties too, right? Like
Yeah.
you're teaching them and they're learning, so they're growing their knowledge in it, which makes them better business owners, as well as it also helps us because then they're better business owners and it helps us with doing the work with them.
Right.
Yeah, when they deliver their books to us to do a tax return, it's a cleaner set of books for us to work from, and probably a little bit less challenging.
If a client has messy books or financials, how does that impact your ability to work on tax planning versus just compliance? Does it make a difference?
Yeah, great question. Absolutely, it does. In fact, when I meet with clients, towards the end of the year, if they want to do a little bit of tax planning, that's usually part of the process. Is we've got to clean up their books. We've got to go through their books and adjust things that aren't recorded properly in order to get a good picture of like what their taxable income projection looks like.
Yeah.
So before we can even do that, we need a clean set of financial statements to work from to accomplish that. So that's that's generally the first step that we do when we're looking at planning, is just make sure we've got good data to go off of in the
Yeah.
first place, right?
Yeah.
Yeah, all starts with that, really.
Yep.
Well, thank you so much, Ryan. We really appreciate it. Kind of just a summation of everything that we talked about, pretty much. Just have a good start off when you're starting your business, have a good accounting software or practice or system in place, making sure you're reconciling those accounts, your bank statements, your credit cards, your loans, such and such, those things. And then kind of just looking out for those, little small mistakes that we talked about with, your car expense. Sometimes assets are put onto the P&L, your personal expenses, and those kinds of things.
Yeah, absolutely. And don't be afraid, don't be afraid to dive in and just try to educate yourself a little bit.
Yeah.
With some basic accounting knowledge and how to read financial statements and as part of that process.
Yeah. Everyone's learning.
Absolutely. Yeah. I think sometimes we take for granted what we know, right?
Right.
Because we've gone through, the schooling, we have some work experience. And so for us, it just is second nature.
Mm-hmm.
But for somebody who doesn't have an accounting background, it's like a foreign language.
Yeah.
It really is. And so it takes a little while for people to kind of be comfortable with the terms, reading financial statements. And that takes a little bit of coaching and advising. And, I think that's part of the services that we offer. When we're doing tax work, we're also helping them with their accounting system and cleaning up their books and hopefully coaching and educating them a little bit on how to do things a little bit better in the future so they have better information to arm themselves with.
Awesome. Thanks so much, Ryan.
Yeah.
Thank you, guys.
Yep. Thank you, Ryan. And thanks, everyone, for listening.
For more information about Larson Company and other educational material, you can find us at our website, larsco.com, also linked in the show description. For questions or suggestions on future episodes, you can contact us at larsonpod@larsco.com. If you would like to learn more about today's episode topic, additional resources can be found in the episode description.